If you're over the age of 30 and you don't feel like you've saved enough money or invested enough money, the way you turn your finances around is not by cutting Starbucks out of your life. Instead, I want you to try this. See, most people assume that being broke is just a math problem that you have to solve. How do you spend less than what you make? Except there's more to it than that, and most of us are never taught this. I mean, if it was so easy, you wouldn't see the majority of people be broke with no savings, with little to no investments. If you really want to turn your finances around and become wealthy and become a millionaire, you have to understand two things. Number one is you have to understand the mindset and emotional side about money, and then you have to understand number two, the practical side of money, because if you just sit there, you close your eyes and you close your hands and you say, please God, please just put $1 million in my lap, you are going to sit there broke for the rest of your life, which is why you have to understand the emotional side and the practical side of money. And if you stick with me until the end of this video, you're going to know exactly how to do that with a system of how do you start building wealth today. So let me jump right in with part one, because if you don't understand this, it doesn't matter how much financial education that you have, you will never become wealthy. If you're anything like me, you didn't grow up with this healthy relationship with money. You grew up with this whole thinking that money is bad, it's taboo, it's evil, you shouldn't stress about money, rich people are bad. You grew up with this negative association with money, and the reason why you had this negative association with money is because your parents or your grandparents passed this on to you. And when you don't break the cycle, what do? You then take this knowledge, you learn it, you absorb it, and then you pass it down to your kids. And then you never actually understand how money plays a part in your life. But this is where I want you to take a step back and understand, how does money actually work? Because the reality is money is just paper. It's not good, it's not bad, it doesn't have an emotion. Money is just there as a tool to allow you to buy things. And you're going to work every single day to generate this money. The more money you have, the more financial freedom that you can have. But this is where you need to understand how money plays a part in your life, because many times people put these smoke screens around money because they're insecure about their own money. And that's why it's important for you to understand how money plays an actual part in your life, because the reality is it costs money to eat, and it costs money to feed other people, and it costs money to take your wife on the vacation she keeps asking for. It costs money to take your kids to that Disneyland vacation they keep asking for. It costs money to put your kids through college. It costs money to buy yourself that home that you want. It costs money to do all of these things. And this is where you have to understand, how does money actually play a part in your life? And what I put together is what I call my quadri-fit theory, which goes over the 4 different fitnesses in life. That if you want to live a happy and fulfilled life, you have to be fit in these 4 areas. Because the goal isn't just to be rich and miserable. The goal is to have money and be happy. Because if you're rich and you have no happiness, what's the point of having all the money, right? So at the very base, you have to be physically fit. Because if you're morbidly obese, if you're on your deathbed, if you're very physically unhealthy, more money is gonna make you feel more miserable. I mean, if you're on your deathbed, you don't care if you have $10 million in the bank. All you want is to be healthy again. So you have to be physically healthy first. Then it's this mental healthy. Mentally healthy means you have to be surrounded by people that you love. You have to be happy. If you're constantly surrounded by toxic people, if you feel depressed, if you feel anxious, more money is not going to solve this mental issue by itself. Now, maybe it can assist in some areas, because financial issues are one of the leading causes of divorce and suicide. However, if you feel like you are unhappy in your environment, if you feel like there's this thing that's holding you back, you have to take care of this by itself. It means you got to get away from the toxic people. You got to put yourself in a good environment. You got to surround yourself with people that you love. You have to find your happiness. You have to figure out how you can go and do that. Maybe that means you go and get therapy. Maybe that means you go into a rehab place. Maybe that means you go and get some treatment. You got to do whatever you got to do to take care of your mental health, because, well, if you try to solve your mental issues with more money, what you're going to end up realizing is that the more money is going to make you more miserable, because now that money did not solve these mental issues that you're working to solve. Then you have to be spiritually fit, and spiritually fit does not mean you have to be religious. Spiritually fit means you have to have a purpose. What's the reason for you to get out of bed every morning? What's your reason for wanting to go and conquer things? Because, well, if you are spiritually unfit and then you go and get all this money, now you're going to feel even more miserable, because now you have the money, but you have no reason to actually get out of bed and do anything with that money. So you have to figure out what it is that you're here on this earth for. Now, this is where a lot of people say, you got to find your purpose. This is the whole movement of what is your purpose? Well, let me tell you something. Your purpose is going to change every few years. My purpose today is not the same as my purpose when I was in my 20s. So don't worry if you don't know what your purpose is. Everybody keeps talking around Instagram and Facebook about, you got to find your purpose. It doesn't work like that. You got to figure out what it is that gets you excited, that makes you want to do something. And the only way you figure that out is by going out and doing things. If you don't feel like you found your purpose, that's okay. Once you're spiritually fit, this is where now financial fitness becomes so important because it is the top of this quadri-fit theory. Because now if you are financially fit, this allows you to live your life the way you want and live happy. Because the reality is you need money. You need money to pay your bills. You need money to do the things that you want. But now, once you have these, more money will allow you to live even more happy and more fulfilled, because now you can do more things that allow you to be spiritually fit. More money will allow you to do more things that allow you to be mentally fit. More money will allow you to do more things that allow you to be more physically fit. You need money to be able to live your life. And this is where you have to understand now, how does money play a part in your life? And the interesting thing here is if you don't have money, well, the lack of money can really affect your spiritual fitness. Because now you can feel like you lost your sense of drive and purpose if you don't have any money. The lack of money can really affect your mental health, your mental fitness, because if you don't have money, you're going to be fighting with your wife and your husband all day and all long about how you're going to pay your bills. You're going to be stressed out about how you're going to buy anything. It can really hurt you here, and the lack of money can affect your physical fitness as well, because if you don't have money, you're going to be eating all the nasty foods. You're going to be eating at McDonald's, you're going to be eating all the nasty stuff. It doesn't take care of your mental health either. And this is where you got to understand, if you want to be financially fit, before you go out and start doing all the practical steps of how do you manage your money, you got to understand that if you just hate money, and you hate people who have money, and you hate this idea of becoming wealthy, you will never become wealthy yourself. How can you go out and do something that you hate? Because at the end of the day, we want to be happy with ourselves. And even if it feels like you're doing something wrong, if you thought you were doing something wrong, you probably wouldn't do it. You try to do things that are good. You try to do things that you think are right. And if you think making money is bad, if you think becoming wealthy is bad, if you think being rich is bad, you're not going to want to do that. And this is where now you have to understand, your goal is to become financially fit, along with everything here. I'm going to focus on the financial side. But if your goal is to become financially fit, you have to want to do that. That means you have to think that it's a good thing. And if you think it's a good thing now, you can start reframing the way you look at money, and then start reframing the way you look at how do you manage money. You start reframing the way you look at investing your money. You start reframing the way you look at earning money. And this is going to allow you the opportunity to then go out and actually build your wealth, because money is just one aspect of your lives. But it's an important aspect of your lives, because now if you have money, it gives you the opportunity to live a much more fulfilled and purposeful life, because you have the money to do the things that you want. But that means you have to actually want to become wealthy in the first place. This is the emotional and mental side of money. Once you understand this, now we can go into the practical side of money. How do you actually take the money that you have and turn your finances around and build your wealth, or become a millionaire, or hit whatever financial goals that you have? So let's talk about that. Now, to really understand the practical side of money, let me give you a little example. Let's assume that you're on this ship right here. For my male followers, I'm going to draw you a mustache, or as we like to call it, my native language Punjabi, a gut. And for my female followers, I'm going to draw you a braid, or as we like to call it in Punjabi, a gut.
We're going to jump back into the show in just a minute, but before we do, here are a few words from our sponsor, Policygenius. Term life insurance is a financial tool that you can use to protect your family in case of a tragedy, because if you are the breadwinner of a family, and if something were to tragically happen to you and you lost your life, well, that's when term life insurance would kick in and give your family a check. That way, at least your family would be okay financially. Now, if you are looking for term life insurance, Policygenius can help you, because they are an insurance marketplace, so they can help you save money and find the best option for you. See, Policygenius is an insurance marketplace. They're not an insurance carrier. So the way it works is you go onto their website and enter in a few pieces of information, which just takes a few minutes, and then they will present you with different term life insurance quotes from different insurance carriers. That way you can pick the best option for you. The Policygenius service is completely free to use, and if you have questions, you can talk to a Policygenius insurance expert and get unbiased advice to find the best option for you. The Policygenius service is completely free, and if you have specific questions, you can talk to a Policygenius insurance expert and get unbiased advice. So if you want to learn more and get a free term life insurance quote, I got the link to where you can do that with our sponsor Policygenius down in the description below. Minority Mindset is a paid partner with Policygenius, meaning if you use them, we will get compensated, but there's no additional cost to you. So if you want to learn more and get a free term life insurance quote with Policygenius, I got the link to how you can do that down in the description below. And with that, let's go back to the show.
You are on this ship right here, and you want to go to this island right here. And so what most people do is, when they're on this ship and they want to get to this island, they say, we got to row faster. We got to figure out how we can get here as fast as possible. And you just keep putting in all this effort to keep rowing and rowing and rowing. But the problem that most people have in this situation when it comes to money is you have these holes in your boat. So now you keep trying to row faster and faster and faster, but you're not really making any progress. And the reason why is because water keeps getting into your ship. And when you keep trying to get there faster and faster and faster, you keep rowing the boat, you're not making any progress because you haven't figured out how to stop the sinking. You're spending all of your time and effort just trying to throw this water out of the boat, trying to make any progress, and you're spending all this energy, all this time, all this effort trying to do that while making no progress. And this is where what you need to do first is you got to stop the financial bleeding. You got to seal these holes in the boat, because if you spend a little bit of time trying to seal these holes in the boat, well, now when you start rowing, you're going to start making progress, and you're going to see that it's going to get easier and easier and easier to get to the island as you start to pick up momentum and steam. But if you're just trying to go against the current and you're constantly trying to throw the water out of the boat, you're never going to make any progress. So how do you stop the financial bleeding? Well, this is where you got to take a look at finances and see if you have things like high interest credit card debt. This is where you got to stop the financial bleeding first, because a high interest credit card debt is costing you 15, 20, 25% a year in interest. And when you're paying all this money in interest to your credit card company, or to the payday loan company, or to the buy now, pay later company that you bought things but then you didn't pay it off in time, or to the 0% APR company that you got this 0% APR debt but didn't pay it off in time, now you're paying 15, 20, 25% in interest. This is the money you got to pay back first. And you want to pay this back as fast as possible, because many people assume that if I want to become wealthy, I should just start putting money into my 401k, into my IRA, I should put money into the stock market and do all these things. Well, the reality is, when you put your money into the stock market, you're trying to get a 7 to 10% return on your money. This has been the historical stock market return over the last century. But when you have these high interest debts, you are paying 15 to 25% a year in interest. So what I want you to do first is pay down this, because this is a bigger number than this. So you got to take this high interest debt and you got to get aggressive to stop the financial bleeding, to stop the water from leaving the boat. And that means you got to take a little step back from your investments and pay this off as fast as possible, because these high interest debts are skinning you alive. You should not be worrying about investing your money if you have credit card debt, if you have this buy now, pay later debt, if you have these payday loans you got to pay off, if you have these high interest debts, you should not be trying to invest your money. Right now, you got to pay this off as fast as possible. Once you do that, this is where now, in addition, I want you to go out and save your first $2,000. Right now, the majority of Americans do not have $1,000 saved up for an emergency. And if you look back for the last number of decades, every financial planner would talk about how you need to save your first $1,000. But what we've been seeing happen, especially over the last few years, is that inflation has made things much more expensive. And so now, if you want to be able to have a little bit of a financial cushion to save you and protect you against little financial emergencies, you got to have at least $2,000 saved up. Now, the goal isn't to just save $2,000, but I need you to go out and save $2,000 as fast as possible. This is your first step. You got to build your financial base. If you talk about how do you now stop the ship from sinking, how do you actually start making some progress, this is what you got to do. You got to pay down the high interest debts, and you got to save this first $2,000 as fast as possible. That way, then you can actually start rowing and start accelerating. But until you do this, you're never going to ever be able to become wealthy. So how do you actually make this happen? How do you pay down your high interest debts? How do you save your first $2,000? That means, number one, you got to stop spending money. That might mean you got to cut back on Starbucks. That might mean you got to cut back on those monthly massage memberships. That might mean you got to cut down on whatever car that is that you're driving. If you're driving a BMW, but you have high interest debts, or you don't have $2,000 saved up, you have a problem. You want to sell that car and go get a used car that you can afford with cash that doesn't take the premium gas. And that means now you got to cut back on your lifestyle, you got to stop some of the spending, you got to turn down some of the vacations, you got to turn down some of the spending, you got to turn down the club on Friday, and you got to turn down Benihanas. And the reason why this is so difficult isn't just the math problem of, okay, I got to spend less money. It's the emotional problem of, wait, what do you mean you don't want to go out with me on Friday? Wait, what do you mean you don't want to come to my bachelor party? Wait, what do you mean that you're not going to be able to come to my wedding? And these are now the questions that people are going to look at you like you lost your mind. When they see you go from a BMW to a Toyota Corolla, people will look at you like you're the crazy one, like you're having financial problems, like you're the one that's having issues because you're not going to the Bahamas. But in reality now, what you're actually doing is you're actually trying to build your wealth instead of trying to stay broke like you were before. And ironically, when you were spending all this money, people thought that you were balling out, that you had all this money. But now as you start to cut back, as you start to actually build your wealth, now people look at you like you're the broke one. But this is where now it's important for you to understand that you got to understand the mindset side. Your goal is to become wealthy. And part of this means you got to understand the math part of becoming wealthy. And the other part is you got to be able to handle the criticism and remember why you're doing this. You're doing this so you can have real financial freedom. My goal is not for you to cut back on your lifestyle that way you can never enjoy your money. My goal is for you to buy whatever the heck you want, but be able to afford it and not have to worry about the price. But in order for you to get there, you got to go through this period of sacrifice. I call it the decade of sacrifice. We're going to have to go through this period of spending less and earning more. That way you have more money to invest, because the reality is, if you keep spending all your money, you're going to make everybody else rich at your expense. Because when you're going out and you're spending your money at your banker, when you're spending your money on your credit card, when you're spending your money at BMW, when you're spending your money at Gucci, you're making all of these companies rich. But the one entity, that one person that does not become rich when you're going out and driving a BMW, when you're wearing the Gucci, when you're having all the nice things, is you. You are the one that is not rich because you're making everybody else rich. And this is where you got to flip the script. You want to make yourself rich before you make everybody else rich, which brings me now to the second thing that you want to do is you want to create some sort of system for your money. What every single wealthy person has in common is when they earn money, they know exactly out of this new $100, $1,000, $1 million that they generate, how much of this money can be spent, how much of this money is going to be invested, and how much of this money is going to be saved. They don't leave this up to question and just wonder what's going to happen with their money. What the majority of everybody else does, what the majority of broke people do, is they make money, they spend their money, and then they wonder where all their money went. And this is where you got to start changing the way that you use your money. That means that from now on, every dollar that you earn has to go through a funnel. And a simple funnel that you can follow is something like a 75, 15, 10 plan, which says that for every dollar that you earn from now on, 75 cents is the maximum that you can spend. 15 cents is the minimum that you invest, and 10 cents is the minimum that you save. Now what you're doing is no matter how much money you earn from here on out, you're always going to be paying yourself first. What does it mean to pay yourself first? That means you are going to invest and save some of this money before you go out and then spend all this money. Because what ends up happening to a lot of people is you make $100, you feel like you can go out and spend $100. And when you have this mindset of, I made 100 so I can spend 100, I made 1,000 so I can spend 1,000, you're always going to be stuck in this game where you're just constantly trying to spin your wheels and working harder to make more money, to drive a faster car, but you can never actually get ahead. And this is where you got to stop that by taking a little step back. And that means now you got to invest and save your money before you spend all your money, because what you're going to be able to do is when you do this correctly, you're going to be able to use your investments to make you more money. Now, these investments are not going to make you a ton of money tomorrow, but it takes time for this money to grow and compound and actually generate you a return. But once it starts doing that, now you're going to start to have more money coming in. That's going to allow you to have more of the nicer things, and you don't have to worry about the price, because this is money that you're generating without having to go to work to get paid. Your investments pay you in a way that your money is making your money. This money that you're generating from your job or your business, you got to work to get this money. So if you're working to get this money and then you're spending all this money on dumb stuff, and I'm going to call everything dumb stuff. Your car, your home, your vacations, all that's dumb stuff. But if you're working hard to buy the dumb stuff, well, you're working hard to make everybody else rich. But if you're working hard to buy the assets, and then your assets, your investments are paying for your dumb stuff, well, now it's that easy earned money that's buying you that dumb stuff. Now it doesn't feel so bad to go out and buy the dumb stuff, because you don't have to work hard to get it. You got to work hard to get this money in the first place. Use this money to make yourself rich first with these investments, and then use your investments to buy the dumb stuff. I want you to have whatever dumb stuff that you want. Nothing wrong with having the dumb stuff, but when you're working hard to just buy dumb stuff, you're never going to actually build any true wealth. So when you do that, you're making everybody else rich. And that's why you want to create some sort of system where now you are not spending all of your money. Now, what I do recommend is to create 3 different bank accounts. And many banks will allow you to do this for free, where now anytime you get paid, money hits your checkings account right here. Then when money hits your checkings account, some of this money automatically can go into a different account where you hold your investing money, and some of this money goes into a different account that holds your savings money. This way now, your money is separated, and you cannot accidentally spend your investment money on a new Gucci belt. You cannot accidentally spend your savings money on a new TV. This way you have a little bit of differentiation and you can't see all this money here. So you want to create this real system now where some of your money is going to be put aside for investments, some of this money is going to be put aside for your savings. The more money you invest, the wealthier you'll become. Your savings are not there to make you wealthy, your savings are there to protect you against an emergency. Now you don't need to save your money forever, you want to save somewhere between 3 to 12 months worth of expenses. And the amount of money that you save is going to depend on you, your risk tolerance, and where you are in your financial goals. If you're 22 years old, and you don't have any financial responsibilities, well, you don't need that much of savings because you can be more aggressive. You can be more aggressive with your investments and you can take more risks. So if you're 22, you don't got any financial responsibilities, you need very little savings. But now if you're 45 years old, you got kids, you got a spouse you got to take care of, maybe you're taking care of your parents, you're a little bit less ability to take risk, then maybe you save some more money. So depending on where you are in your financial situation, depending on your risk tolerance, depending on kind of what type of needs you have, that's how you decide how much money you save. Once you hit your savings goals, that's when you reallocate the saving money to your investments. Because again, your investments are what is going to actually make you wealthy. Now, where can you invest your money? The three places, the three asset classes that have built more wealth than any other asset class over the last century are stocks, real estate, and businesses. Stocks give you the ability to go out and invest in the companies that make this country. You can go out and invest in some of the biggest companies in the world, and even if you don't want to invest in the individual company, you can invest in funds that give you exposure to the entire economy. You can invest in funds that give you exposure to the total stock market. You can invest in funds that give you exposure to the S&P 500. That's a group of the largest 500 companies in the stock market. You can invest in funds that give you exposure to technology. You can invest in funds that give you exposure to healthcare. You can invest in funds that will give you exposure to international companies. You can invest in funds that will give you exposure to dividend-paying companies. So now, if you want to invest in stocks, that's the most accessible way to go. You can start by investing as little as $100. But the key here is you want to keep consistently investing because most people, they assume that if I want to put my money in the stock market, I got to go and find the next Google, I got to find the next Amazon, I got to find the next Apple, and I got to throw my money into that. Well, when you do that, you're taking on the most risk because number one, you might not know how to do the research. Number two, you're trying to find the next hot stock. And number three, if you invest in a bad company, you can lose all of your money. And this is where now, if you don't want to be involved in listening to the earnings calls and keeping up with the company and trying to understand the company and monitor investments, instead of investing in individual companies, you can just invest in funds. A few examples of these funds are ETFs, index funds, and mutual funds. And again, there are funds that give you exposure to really anything. And now if you invest in this one fund, you can get exposure to a whole basket of stocks. And now all you got to do is keep funding it. Every time you get paid, you put some more money into your fund. Every week, every 2 weeks, and every month, you just keep putting more money into this fund. And this is where people get confused because they think, well, what happens if the market's going to crash? What happens if we see a recession? What happens if we see the stock market go down? All you do is buy more. Because what we've seen over the last century is that despite the recessions, despite the market crashes, if you just keep buying, you will be able to build more wealth. Because our economy has gone through cycles. In fact, our United States economy has gone through a recession pretty much every decade for the last century. So if we go through recessions, if we go through market crashes, all you need to do is keep investing. Instead of being the person that panics and sells and loses money, be the person that keeps consistently investing. You stay calm when everyone's running around with their heads cut off. Everyone's talking about how the world's going to end. Everyone's talking about how the stock market will never rise again. You just keep calmly buying and accumulating more shares because this gives you the ability to buy even more at a discounted price. That's why wealthy people love recessions because it gives them the ability to build more wealth even quicker. So you build a system that allows you to do that. If you want to be more involved, you can invest in individual companies. If you want to be more involved, you can invest in something like real estate. Real estate gives investors three big benefits. You get cash flow because now if you go out and buy a rental property like a home or an apartment complex, you buy this property for the ability to generate cash flow. The tenants pay rent and this rent should cover all of your expenses, your property taxes, your insurance, your maintenance, your management fees, your vacancy costs, and your mortgage if you have any, and then put some money in your pocket. If you do it correctly, that is what real estate is supposed to do. But in addition to the cash flow, you also get tax breaks. As an attorney who's not your attorney, I can tell you that real estate has some of the biggest and best tax breaks that our tax code has to offer. And number three, you also own a hard asset because when you own real estate, you own something that you can see, feel, and touch. You can see the bricks, you can see the windows, you can see the doors. So you have this thing that you can see, feel, and touch versus when you own a share of the Amazon stock. You own a piece of paper that says you own some of Amazon, but you don't actually own any of the Amazon machinery. You just own a piece of paper that says you're entitled to some of the ownership. So you get those benefits with real estate. Then with number 3, with businesses, this one is the most involved. You can go out and actually create your own business, which gives you unlimited earning potential, but that takes the most work, the most time, the most risk, and the most effort. Now, there's also a chance that you'll fail. In fact, most startup businesses fail. If you don't want to go out and start your own business, you can also invest in other people's businesses. But again, very risky. Most startups will fail. Most of your startup investments will fail. However, if you can hit a good startup investment, if you can hit a good business investment, that will give you the opportunity to make a lot more money. However, this one, investing in other businesses, is generally reserved for people who have more access to capital because of just how much money it takes for you to get started as a venture capital investor or an angel investor. So just understand that there are different ways for you to invest your money, but the 3 avenues that have built the most wealth out of any other asset class are stocks, real estate, and business. And I should also mention that it doesn't really take a lot of money to start your own business, but it takes a lot of work and effort. You don't need money to make the money, but you need money to grow your money. Once you build the system of how you want to use your money, that we're always investing your money and saving your money before you go out and spend all your money, you also want to make sure you can control the spending money, because if you go back into the same bad spending habits that you had before, well, you can never out-earn bad spending habits. So a few things that I want you to remember here when it comes to spending is do not finance anything that's not putting money in your pocket, the only exception being your home. So when it comes to you going out and buying a car, you buying your phone, you buying your electronics, your groceries, stop financing the stuff, even if it's 0% APR. And everybody says, well, if instead of me paying $1,000 for my phone, I can just pay $50 a month, I can invest that difference and have more money in my pocket. Sure, in theory that makes sense, but what ends up happening with most people is now you go out and you finance this phone, you're only paying $50 a month, and then you go out and you finance this sofa, you're paying $75 a month, you go out and you finance your car, you go out and finance more things, and now you go out and spend more money than you would have if you had to buy it with cash, because you don't actually feel the pain of this money leaving your account. That's why 0% APR, buy now, pay later, or as I like to call it, broke now, broke later, are so profitable for businesses and banks, because they know that you are going to go out and spend way more money when you do this 0% APR or buy now, pay later. So when it comes to you actually spending money, you got to shut down these expenses. That means you got to actually buy what you can afford. And that means number 1, stop financing things that don't pay you. And number 2, if you're actually going to buy something, make sure that you can actually afford it, not just buy it. One of the rules that I like to follow is a rule of 5, which says if I can't buy 5 of them, I can't afford 1 of them. Now, you can apply this rule to different aspects of your life to see however it is that you want to spend your money, but the key here is if you have $100 in your account and you spend all $100, well, you're going to constantly be broke like that, and you want to make sure that you have money. You want to be able to spend within your means, and understanding that number 1, you can only spend this money, but now out of this money, how much should you spend on one item? How much should you actually be able to afford? Because if you have $1,000 in your account and you want to buy a $1,000 handbag, you're spending all of the money to buy a handbag. I wouldn't do that. And this is where you got to understand how to control your spending. And then if you have low interest debts, if you have things like a mortgage, if you have things like a car note, this is where you can also decide if it's worthwhile for you to pay down these debts or continue investing your money. And this question is really going to depend on you, because if you are somebody who wants to live big, you want to fly around in first class, you want to fly in private jets, you want to have the fancy vacations, if you're just working to pay down your 5% mortgage or your 6% car payment, you're never going to be able to really grow like that. You're going to have to work to earn more money, and you're going to have to be more aggressive with your money. But if your goal is just to be financially free, never want to have to stress about money, never want to have to worry about money ever again, well, then you can also consider, instead of just investing your money into the markets, to just pay down some of this debt, because when you have no expenses, you're also going to be able to be a lot more financially free. So to answer that question, it's going to depend on where you are and your personal interests and goals and risk tolerance and investing education. But just understand that you paying down these debts is another form of investing. Now, once you understand this, once you know how to spend your money, this is where you want to add some more fuel to the fire. Now, the question is, how can you earn more money? That way you can amplify this machine. And the reason why I'm talking about earning more money here is because, like I said just a minute ago, you cannot out-earn bad money habits. And the thing that most people try to do is when they realize, oh, I'm broke, I need to figure out my money, I need to invest more money, I need to go and get more money. And when people make more money, statistically what we've seen happen is that the majority of people end up in a bigger financial hole. Why? Because they don't know how to do this. And so then what happens is you get a raise, you get a promotion, you get a bonus, now you go on a trip to the Bahamas. You go and buy a new car. You go and upgrade your home. You go and upgrade your lifestyle, your spending before you inflate your investments. And that's why you need to have some sort of system like this. That way now as you earn more money, you're always investing more money. You're always saving more money before you just go out and spend more money. Now the question is, how do you earn this more money? And well, there's a lot of ways to do this. You can do this from a job, see if you can get a raise, see if you can get a promotion, see if you can get a second job. Maybe you get a career change, maybe you get a certificate. You can figure out ways that you can earn more money from your career. But maybe that means you go out and create your own side hustle. Maybe you have a little bit of an entrepreneurial bug, that you want to create your own business, you want to create your own income. Now it's hard work, but it is possible. There are so many free resources out there, thank you YouTube, that can teach you how to do that. Because now when you're trying to figure out how do you 10x your income from 50 grand to $500,000 a year, well, that $500,000 a year is going to allow you to invest a lot more and save a lot more and get you to this wealth a whole lot faster. Because now you're making the money not just to drive a faster car and to have nicer things, you're making the money to have more investments. But the question is, how do you get there? Now, I can't tell you what to do. One of the dumbest and most annoying questions people ask me is, what business should I start? I don't know. I don't know what you're interested in. I don't know what your passions are. I don't know what you enjoy doing. I don't know what you're good at. I don't know what you're bad at. Find a problem. Once you figure out the problem, see how you can solve the problem and charge money to solve that problem for other people. The bigger the problem, the more the people will be willing to pay for it. The more difficult it is to solve the problem, the more the people will be able to pay for it. The bigger this need, the more the people will be willing to pay for it. But you have to be able to solve a problem and monetize that solution if you want to be able to make more money, especially if it's something that you create. But now as you make more money, you're going to have to ask that same question: what do you do with your profits? You take that profit and you invest it in the stock market, you take that profit, you invest it back into your business. But I will save that question for a different video because that's getting a little bit beyond what I want to talk about here. Once you do this now, you know how to save, you know how to invest, you know how to spend, you know how to earn more money. Now the question is, how do you protect your assets? And as an attorney who's not your attorney, I'm going to tell you this because, well, when people realize you have money, they're going to try to take their hands and put it in your pockets and grab some of that for themselves as well. And that means you want to surround yourself with good attorneys and good tax accountants and accountants to protect you because, well, people will try to sue you. People will try to come after you. People will try to do a whole lot of things to try to take some of your money for themselves. So the best thing for you to do right now is you got to figure out how you can find a good attorney. Now you want attorneys to protect you if you have businesses, to create legal entities, legal sheets, health insurance, but you also want to have your tax advisors and financial advisors because, well, as you make more money, your tax liabilities can also go through the roof. And you want to make sure that you have a good tax advisor, not just a tax advisor, a good tax advisor, because there's a very big difference. I learned this the hard way. There's a very big difference between a good tax advisor and a bad tax advisor. And if you have a bad tax advisor, they might be cheaper to file your taxes, but they're going to end up costing you way more in your mental capacity, in your stress, and also way more in how much money you have to pay in taxes. So it pays as you start to earn more money, as you start to build this wealth, to go out and find a good tax advisor for yourself. If you want to get more things out of life, it's not just wanting nice things. Everybody wants to become successful. Everybody wants to get in shape. Everybody wants to be happy. Everybody wants all these nice things. But the question is, what are you prioritizing in your life right now? 3 steps you got to understand. Number 1 is you got to decide what it is that you want. Number 2, then you got to prioritize what's important for you. And then number 3, you got to go out and get it.